Hi, everybody. Welcome back again. All right. I'm recording this in very early 2024, thus the puffy vest as I sit here in January, and wanted to talk about some known changes to the tax code that are coming up that offer significant planning opportunities. So usually we stay a little bit higher level in these episodes, but wanted to get a bit tactical because we have such an interesting window for decision making here in 2024 and 2025. So a brief summary: the Tax Cuts and Jobs Act of 2017 made a whole host of changes across the tax code, and a lot of those provisions are scheduled to end or sunset at the end of 2025, with things reverting back to the way that they were prior to the Tax Cuts and Jobs Act being enacted. So the top five that we really think create some ideal planning opportunities for business owners in the next couple of years are: number one, the estate tax exemption amount. So the amount that you can pass to others throughout your lifetime through gifts or through your estate at the time of your death is really at a high level at about $13.6 million per person. So as a married couple, you could pass on $27.2 million to the next generation without it being subject to the 40% federal estate tax rate. You can engage in some things to be able to lock that number in and move things out of your estate here in the next 2 years. So especially as entrepreneurs and business owners, we have closely held business entities, closely held stock, appreciated assets, other things that we can move out of our estate, continue to utilize and maintain access to them, but have them secured for future generations. So definitely a huge planning opportunity in the next 2 years. And there are a variety of different estate planning strategies that will allow you to do that. So definitely a top opportunity. The next one is changes in marginal income tax rates. They are going to be going up under current law. So today, the top marginal income tax rate is 37%. It's scheduled to be 39.6% at the federal level in less than 2 years' time. So thinking about income recognition, what you want to be taking in on your tax return here in the next 2 years is really going to be an important decision to make. The next one is the qualified business income QBI deduction will be going away. So if your business has been claiming the QBI deduction here over the past however many years this is, 8 years now, that deduction will be going away. So definitely something to meet with your tax team about and see what your tax plan is going to look like here in the next couple of years. And if there are things that you can do in 24 and 25 to be able to take advantage of that deduction. Bonus depreciation. So it was originally extraordinarily generous for property that was placed into service with your business, that you could go ahead and take a 100% bonus depreciation deduction in the year in which you put it into service rather than depreciating it over the normal schedule. In 2023, that reduced to 80%. So you could take 80% of the cost of that item and go ahead and depreciate it out in year one. This year in 2024, it has dropped to 60%. Next year in 25, it will drop to 40%, and then 20, and then ultimately 0. So if you have large equipment purchases that you need to be making, if you're looking at putting property into service with your business, it would probably behoove you to do that. If you have some control over the timing of that decision, it might make sense to do that this year rather than in the next couple of years. And the last one is always our favorite, AMT, alternative minimum tax. The Tax Cuts and Jobs Act really increased the exemption amount there. So it was designed so that fewer people would be caught having to pay alternative minimum tax, and really adjust that up to where inflation had taken a lot of the original income numbers as AMT was designed. So that is going to be going away. A lot more households are going to be caught by AMT coming up in the next 2 years. So definitely something that you want to be talking with your tax team about now in 24 and 25 to make sure that you're prepared and make sure that your entity structuring, that your income receipt, how you're taking an income, all of that is really in the spot that you want it to be in. So those are the top 5 that we're looking at, but there's a whole host of other planning opportunities that exist during this short period of time when we have certainty in the tax code. Congress may decide to extend some of these out. They may decide to totally rip up the tax code and start from scratch. That's unlikely. But Congress can always make changes. What we do is we operate under the tax code as it is written and as it is scheduled to be written here in the future. And that's why we think there are a lot of opportunities in front of us. So entrepreneuraligned.com is where you can go to get all the goodies to dive deeper on tax and tax planning and making sure that you're setting yourself up for success, operating within the tax code as it's written. Thanks for giving me some of your time. I'll be back again soon.